What is going on, everyone? This is Andrew O'Connell with Pristine Capital coming at you with yet another market recap video. Today is November 13th, 2020. Please like this video and subscribe to my channel if you enjoy this content, and I will continue to make it for you. Today we have a lot to talk about. We're going to be talking about the price action, the headline indices. We're going to go under the hood and check out those sectors and subsectors. We're going to talk DraftKings earnings, some trades that I took, including my NEO short. We're going to talk options order flow and why I'm afraid of growth stocks right now. Let's jump right into it. Quick risk disclaimer. Nothing in this video should be construed as investment advice or recommendations. I am wrong 100% of the time, so do not YOLO your entire account into any one of my trades. So with that being said, let's jump right into it. So we're going to start off with the ES. And if we take a look here, we are still looking pretty bullish. Let's run up the scores. We had the S&P 500 up 1.38% today. We had the Qs up 0.88%. We had the small caps, the Russell up 2.07%. That was our big winner. And we had the Dow Jones up 1.41%. So when I was talking in my video yesterday, I mentioned that, we had a great run up, as I've been explaining, and really we have just been consolidating. Yesterday we had that red candle, which ended up turning into a bit of a hammer. And, something that I keep harping on is, we've had a nice run. Really all we had been doing was consolidating sideways. We did have a red candle, but we didn't take out any of the key moving averages. We didn't take out, the value area high. So really at that point was more of just waiting and watching, sort of like a neutral day. But today, sure enough, we did get a nice green candle. We are firmly above, the 5-day exponential moving average. And really right now, it is tough to not go into next week with a bullish bias, because it does look like we are ready to take out that R1 pivot at 3,640 on the ES. And of course, if things change next week, we will change with them. So, if we do start to break levels, if we do start to break down below the value area high, that'll be a different story. But as of right now, this is pretty positive price action. I'll take a look at Qs. Those were our loser for today. Let's take a look. So the Qs, this was our big loser for the day. But to be honest, even this price action, like you can see up 0.88%, clearly the laggard when you're looking at, growth versus cyclicals. But even this, we're still above the value area high. And, overall, this is still looking okay. Now we'll take a look at our big winner. So let's see. Yeah, and the other day I had also mentioned, it looked as if the value versus growth trade could be unwinding. And you see here with the Russell, we had that, red candle. Again, we did end up closing above the 5-day exponential moving average. And today we got very nice follow through. So in terms of all these other value rotations, what I've noticed is you get a very explosive move higher, such as this big, exhaustion candle up here. And historically in 2020, these value rotations basically implode, where you get this massive exhaustive high and they immediately fall right over. Whereas this one, you can see we got the exhaustive high, but we're really just consolidating, and this is looking more like we're going to get continuation. So the Russell is looking very good. And then Dow is most likely going to look very similar. Let's see. Yeah, very similar to the Russell. Looking pretty positive, and it is leading compared to the S&P 500 as well as the NASDAQ. So you definitely want to keep that in mind going into next week. So let's take a look under the hood. We'll talk about that later. So let's take a look at these. We'll look at the sectors. Again, the sectors that have the highest amount of momentum in the near term are the regional banks, KRE, European financials, which are just disgusting because they're so, fundamentally, they're absolutely dreadful, but you got to respect the price action, and energy. These all took a breather the last couple days. Again, they had that exhaustive move up, consolidated and moved lower for 2 days, and now they're getting a very nice follow through. So this is much different than we've seen prior in the year where all these value rotations are just failed moves. And then if we look at what was towards the bottom of the list, wow, we have software barely even moved up. So that is something that you want to be very cognizant of this. So like we had this massive bullish day. Most of the indices were up by more than 1%. So if you're heavily invested in these software stocks, that's a little bit of a reason for pause. The innovative tech also in the rear, barely even up. And we have gold miners having a nice little bounce. Those have just had no momentum lately. Let's see what else did well. Chinese tech did very well. That is another, red hot sector. And I see retail did okay. Yeah, it was basically like another day of the reopening trade. And let's look at these style factors. Wow, look at this. So we have the high beta style factor ETF up 3.78% today. So really, it's so funny how we go back and forth with these two opposing narratives. One is, we have a vaccine that's coming, and, that's going to make COVID a lot better. We're going to have this nice reopening trade, and all will be well in the world. And then we have this other side where COVID cases are rising, percent positives are rising, and, we may end up shutting down again. So really, you have to go with what you're seeing on the tape. You can't really get caught up, in one central view and cling to it. You have to be very nimble and trust what the price action is telling you. And as of today, this price action is telling you high beta and cyclicals are in, and growth and momentum are lagging. So that to me, I see that on the tape and I go, okay, I need to be a little bit more conscious of how many of these high flyers I'm adding into my portfolio. So let's take a look. Another noteworthy thing today, DraftKings reported earnings today. And I have been a long-term DraftKings bull. This one of my buddies, his name is Mikey Wang. I used to work with him. Shout out to Mikey. He's the one that got me onto DraftKings. He's a super smart guy. But we were getting onto DraftKings back in the 20s. And I had been selling covered calls on my position. So my cost basis on my original DraftKings position was in the teens. We had this massive run up, and this is where it became a meme stock right up here. So, we had this massive run up. Sure enough, I saw everybody starting to get bullish on DraftKings, and it ended up just having a massive decline. And what I was doing, and I timestamped this on Twitter, I was trimming my positions into this massive strength, and I started adding back my position via short puts as we started this massive decline. So DraftKings, sure enough, they reported their earnings. They did have a nice acceleration in revenue. Their average paying users, went up. So it was a pretty good report. I do like the management team, and I listen to every single earnings call. The one thing that has me a little bit cautious on DraftKings is they are not yet profitable. And when asked on the earnings call several times, what are you guys thinking in terms of future profitability? The CEO didn't really have much to say on that. So that is definitely the first, yellow flag, yellowish red flag. And this company has a massive market cap already. Yeah, it's at $15 billion market cap. So this one is certainly not one, where I think it's like super cheap and like, oh, definitely load up because we're for sure heading back to 60. This one I'm glad I played short puts. And I will still have to decide if I want to actually just close out those short puts or take delivery of the stock. But overall, yeah, I would definitely say it was a good report. Nice for the DraftKings bulls. So let's jump into, this is another thing that I wanted to talk about. NIO today. This was so funny. So let's take a look at the NIO chart. And I'll share with you sort of my background playing this stock. So if we look at NIO, yeah, this one is another straight up meme stock. Look at this. This one, has been very textbook bullish stock that a ton of people have made, great money on. So like props to everyone that has been playing this. This has been an awesome winner throughout the whole year. But yeah, it definitely got pretty frothy where I believe it was one of these investment banks. I forget if it was Morgan Stanley or JPM. When it was trading around 30, they gave it a 40 price target, and this thing just went stupidly bullish. So this one, as you can see, I had played this one prior. And I'll pull that up right here. This is actually my pinned tweet because, this was a nice trade and I like to, pin these. That way I can, just be reminded of some of the good trades that I did. So this one. Yeah, so I got into, take a look right here. I was long the January 2021 calls, the 19 strike. This was in mid-September that I put these on. So when I'm about to go through this story, I'm not some perma neo bull. I've played this one to the upside and I had a nice rip on this one. But even I closed this out November 4th on this candle. I can still even remember the candle. I think it was this doji candle right here. Okay, November. Yep, this was where I closed it out on this doji candle. Sure enough, it went off to the races. This thing had a great run. But this is where it gets interesting. So, I had played the stock. I recently took it off. And, so I keep this one on my watch list. And we ended up getting this short report from Citron today. So if you take a look, Citron pulls the plug on NIO, says valuation can never be justified. And the funny thing with these short reports is these guys, they're right and wrong, maybe 50-50. I haven't analyzed their track record, but these guys, a lot of what they do is they do hit jobs where they go short the stock, they put out a report, it implodes the stock, and then they cover their short. And I believe these guys are shorted Tesla, Shopify. So I'm not saying these guys are the holy grail. Who knows if they even know what they're talking about. But historically, these short reports do absolutely blow up stocks. And considering NIO, look at how overbought this thing got. So this is definitely trading 101 here when you can see something just get absolutely silly. So look at this riding up the Bollinger Band. This means it's basically, 2 standard deviations above the 20-day simple moving average. And look at how far this one has gone, literally since November. In the beginning of November, it was at $30. And it got all the way up. When we opened up today, this one was at $52. So a 50% rip on top of year to date. What is this one? Oh my lord, this one is up year to date 1,100%. So honestly, if you see this one is incredibly overbought, everyone's loaded up, people are getting euphoric on Twitter. Then you see this short report come up. And for me, I went, this could be an awesome opportunity to just scalp this thing short off of the overbought levels. And this is really funny. I'm not going to throw these guys' identity out here because that's not my thing. But it is so funny. When I saw this Citron short report, I saw a bunch of people, going into these YOLO NIO calls on Twitter and these long NIO positions. And that to me was all right, this thing is so overheated. Everyone is literally pigging out on this stock. So you can see this one person bought the NIO November 20th. So literally weekly 66 strike calls. So looking for another 10%, 20% move when a short report was just dropped out. So they're using a short report as their buy signal. And then here you have another one, again, not going to reveal this person's identity. Bring it on, Citron. And they are posting their long entries into the stock, literally on the highs of the day. So this thing, I saw those coming out and I was yo, what are these people doing? So that was where, I initiated a short position on the stock. I went with some long puts. You can see that right here. I took the Decembers because I never like to do weeklies or anything like that. I got into these for $7.50, and I cited the stock's incredibly overbought, and Citron came out with a short report. This is one of those trades where it's not I know it's going to be a winner, but when you have something that is super overbought, and then you have this catalyst that sort of, might make people rethink their position, that is the perfect opportunity to get a squeeze and get a lot of people that are trying to leave the stock all at the same time. So even with this, I make so many mistakes trading. My win rate when I'm trading really well is about 60%. So I lose trades all the time. It's no big deal. But like, literally, I have to call this out. If the stock is like super bloated and somebody releases a short report and you're binging on calls, like that is a straight up naked lap right there. Like that is just so bad. And I'm pretty sure like people that run services were putting these people into this stock. So that was just pretty funny. But what ended up happening, I closed my position at around $12. Yeah, 12.08. If you take a look at what happened with the stock, we ended up putting in this really long lower wick. And basically that means, buyers came in to support the stock. And the reason why this one, I wasn't going to press it or anything. I was just going to, take the scalp, was because if you look here, NIO. Yeah, NIO's reporting their earnings November 17th, which is in 2 days. So the earnings could be another momentum shift. So like this could end up being, just a big, bear trap and the stock just, rockets off to the moon. But I just had to call that out because that was so funny. And that was like, in terms of like risk reward trades, that NIO setup was essentially the holy grail in terms of, like a high percentage trade right there. And those rarely come around. So I'm just glad I happened to be, watching the tape and, ended up putting that one on. So let's see, another trade that I put on. This one, I did get long some KRE, which is the regional banks, the 46 strike calls for December. These ones, I started to notice on the tape that this value trade, was coming back. And as I alluded to earlier, these things usually just implode and then you don't hear about them for, a while. But KRE, as we went through earlier, and that sector, like that sector ETF actually has the most momentum out of everything else. So sure enough, we did get, the explosive top. We had a 2-day pretty nasty pullback. And this is, the sector ETF basically getting follow through to the upside. So for that reason, this is more of like a scalp trade. If we do get our auto gap Monday, I'll probably consider taking off. So those are some of the trades that I put on today. One that I do want to address that I have on a short leash is Peloton. So I put this one on right here on November 10th. And I cited this one on Twitter as well. This one, I was really looking for sort of like a counter trend bounce. And I was thinking, if the value trade implodes, let me pick up this, COVID winner. But the reason why, like, today we had this nasty red candle, and the market is basically telling me, like, okay, this stock is in a downtrend right now. Like, it might be a great company, but, the price action is telling me, like, Peloton, Zoom, those companies like that, like, they're not leading right now. So, like, I'm keeping this one on a tight leash. This one I will stop myself out of, if Monday is another just, meh kind of day. And luckily, I'm not overloaded with these high flyers. This is really the only one I added on the dip, other than apps, and that one has been performing really well. It's the one I did the research report on. I am going to be writing another research report, and this one, I absolutely love this company, Apps. I'll talk about my research report, as we wrap up. So I just wanted to, flag that. Like, I'm keeping that on a very tight leash. And then let's go through some of the other thing I do want to bring up. This video is going to end up being a little bit long, but I think this is important. So like, let's take a look at a company, like we'll bring up Zoom for instance. And the reason why I'm getting a little bit, scared of these COVID winners, growth stocks, whatever you want to call them, is because stocks, whenever they report earnings, they have to comp up against, the prior year. So like if I'm reporting, say like Q3 2020, those results are being compared to Q3 2019. So a lot of these companies such as Zoom got a massive revenue acceleration as we went through COVID. So if you look like, the January 2019 results, 105 million in revenue. Then as we started going through COVID, in 2020, bam, all the way up to 328 million and then 663 million. So really the point is with a lot of these COVID stocks, what's going to happen when Zoom has to then comp up against, this 328 million number or this 663 million number? It's not going to look as attractive and as much of like a hyper growth stock as when you were comping up against, like 145 and 160. Whereas a lot of these other companies that were victims of the shutdown in 2020, such as, like industrials, banks, like, these are really low quality, but like cruisers, airlines, when they're comping up against, March 2020, they're going to look so good as we start to move out of COVID. So that is really like, a lot of people can't wrap their head around that. They're like, but these growth stocks are so great and they're like continuing to grow and like nobody's going to stop using them. But a lot of what happens in markets is based on like rate of change. So you have to look at which companies are accelerating and which are decelerating. So that's sort of like my rant on growth versus value and why like I'm not going to be flabbergasted if these companies, maybe they bounce a little bit, but I don't think they're just going to like keep ripping to like new highs, especially when everybody owns them. So I'm pretty cautious about this group. We'll see what the river brings though. And then we'll take a look at the options order flow for today. This is another, pretty funny right here. Let's take a look at what we got. So we have 64% call flow and 36% put flow. So that's a lot different from yesterday when, there were much more puts being traded. And let's look at the $1 million and above, the big money trades. Okay, 59 and 41. Let's take a look at what they were trading today. So as you can see, we have Tesla. Basically, like everyone always plays Tesla. EFA. Is this the European equities? Yeah, this one I don't think a lot of people are looking at. This one has a lot of momentum. Okay. Yeah, this is I believe these are the European stocks. Let me just double check. I'll double check this, but pretty big order in here. This one has a lot of momentum. Let's see. Yeah, that's ex-US. So yeah, people are going international. Let's see, these other ones, Baba, that one got hit, in a major way. So these people are basically coming in as dip buyers for March. Pinduoduo has been absolutely on fire. Take a look at this one. I traded this one to the upside, but I let go of my position too early. I got my position, I believe, right up here on like this massive move up. But yeah, this one has been an incredible stock. Popped on earnings and it just kept going. But look at this, these neo savages, these neo bloated pigs. Look, these guys are throwing down, $1 million trades on neo. And let's see the time on these. Okay, these were around noon. So wow, these guys, they actually hit it pretty well. And they're basically going with stock replacement plays. So around noon, I believe that was when neo bottomed actually. So these guys hit it pretty well. Let's look at the 15-minute chart. This is where things got really ugly. Okay, if they got in around, yeah, this is like 12:30. So they're about at even. So nothing too crazy, but yeah, they keep going for this stock. Yeah, this guy got in at 11:12. He had a bad entry. Yeah, and then we have some SPY hedges, basically the usual, an Amazon play. So yeah, nothing too crazy today. So that is the options order flow, the large orders. If you'd like to do a free trial of Cheddarflow, I love using this platform. They are offering a 7-day free trial. I will place the link in the description of this video. If you're not interested, I will continue to post this content for free on Twitter, so no pressure either way. So we did talk about, we covered the indices, we covered under the hood, some options order flow. Last thing before I let you guys go and enjoy your weekend is in terms of my research. It's going to end up being a long video. Sorry, guys. So let's see. The people have spoken. So I asked everybody on Twitter, which company would you like me to write a research report on? And we had Farfetch, Plantronics, Cresco Labs, and Aventor. And the winner was Farfetch. And that does not surprise me, because the day that I posted this, Farfetch was absolutely ripping. If you take a look at my video I posted yesterday, I was saying Plantronics is one that to me looks much more interesting because it had a nice pullback to the 20-day moving average. Of course, everybody loves trading like that or chasing that next hot stock. But this one, it's like, do you really need somebody to tell you Fitch is like a good or Farfetch is a good company to invest in? Like, look at how this thing is mooning. Like, do you really think you're going to get a good entry here? It's like this one, I may write the report on this one, but honestly, it looks like what's the point? Whereas, so like that one had a big red candle. Plantronics, of course, which is the one, I think this one may have gotten the least votes. Yeah, this one, when I posted this, it tagged the 20-day simple moving average, and today had a nice move. And this one, it looks like it could get all the way up to, around like 24.75 before being overbought. So to be honest, we'll have to see. I might end up writing about Plantronics. But we will see. But that wraps up my market recap. Thank you so much for spending some of your Friday evening with me. I will continue to post these videos, and have a great weekend. Thank you.